While Nasdaq gets within 8 points of its all-time high closing level, did you know the Japanese stock market is also about to reach its all-time high? The global spotlight is now on the Japanese stock market, with renowned investor Warren Buffett also taking notice, as its key index reaches a 3-decade peak and even to the all-time high. But why? There are many factors, but let me state the 3 biggest factors. First, weak currency rate. The Japanese yen has been decreasing in value because Japan's central bank is keeping interest rates very low to encourage inflation, while other countries, like the US, are raising them to control rising prices. As a result, the yen performed the worst among major currencies against the US dollar in 2023, falling about 11%. The lower value of the yen has benefited big Japanese companies with global operations, such as Toyota and major trading companies, as it increases the value of their profits earned overseas. While leading Japanese companies were experiencing peak revenues, the favorable currency exchange rates also made it easier for foreign investors to buy Japanese stocks. In June 2023, the Nikkei stock average reached 33,000 yen, returning to this level after 33 years. One major reason for this was that foreign investors engaged in stock trading on Japanese stock exchanges reached a record high, totaling over 123 trillion yen. Second, pivot from China to Japan. Chinese stocks have been going down, like in 2015. Hong Kong's Hang Seng Index was the worst major market last year. The stock stopped falling only after Beijing said it would step in, but they're still way below their highest point. By the end of 2023, foreign investors had sold about 90% of the $33 billion worth of Chinese stocks they bought earlier in the year. A survey by Bank of America found that among global fund managers, selling Chinese stocks and buying Japanese stocks were 2 of the top 3 trade ideas, according to the New York Times. Even in China, investors are placing a lot of orders for ETFs that follow Japanese stocks. In mid-January, the trading value of some products surged to over 100 times the usual average, causing a temporary halt in trading. JP Morgan Securities also stated that Japanese stocks doing better than Chinese stocks this year, because of a change in where global investors put their money, will likely continue until 2024. Third, significant change in Japanese investment behavior. For years, the Japanese people have held a preference for the safety of cash when it comes to managing their assets. However, in recent years, there has been a notable change in Japanese securities holdings, indicating a significant shift towards investment. NISA, Japan's new tax exemption scheme for investment by individuals similar to UK's individual savings account system, also boosted the investment. NISA aims to turn the trillions of yen held in cash by households into investments in stock markets. This is contributing to the growth of household financial assets, with investment-related assets making up 80% of the increase in total assets in 2023. The combination of high Japanese and US stock prices, along with a weak yen, has led to a record-high total financial assets of 2,121 trillion yen. Yet, some data shows that still half the population has never invested. Will this continue for the long term? Who knows? Most analysts expect the Japanese central bank will finally abandon negative interest rates in the first half of this year. We also need to note that the most factors I stated are external. It's not happening due to the booming Japanese economy, unlike in the 1980s. Some articles predict the Nikkei average will be even higher than 40,000 yen. Let's see how it goes.